Let's check some business news now and bring in my great friend Peter Switzer, the founder of the Switzer Report. He's across all the details, and our stock markets this morning, we could be in for a battering. Is that right, Pete?
Yeah, I think so, Pete. Down about 50-odd points at the start. And driving it, of course, was the personal consumption expenditure price index, which I talked to you about last Monday. You showed enormous enthusiasm and interest in this statistic. It actually is.
I still don't know what that means, Pete.
Well, personal consumption spending. And,
I get that.
Yeah, so it's what the Fed actually believes is a good indicator of US inflation. It came in at 0.6% in January, more than what was expected, and that made the market think, okay, we've seen strong jobs numbers, we've seen a high expected CPI number. Now this comes along and it means that they're worrying that the Fed are going to keep raising interest rates faster than was expected, particularly in January, when the market took off. Our market is still, by the way, up 5.1% year to date, but it was probably up 7% at one stage. So there's a bit of, the bears are starting to take a little bit more control of the market. The bulls are still, I think, in command, but this week will be a real big test with the data drop that comes following that PCE number.
So it was due then. It was due for the bears to have a run.
Without a doubt,
yeah.
But it wouldn't have happened if the PCE had come in, say, rather than 0.6, if it came in at 0.4 or 0.3, the market would have cheered it, and they would have said, the Fed's close to stopping raising interest rates. Great for the stock market. So in a sense, we have to put on hold until that event happens. That is, the inflation starts to fall in the US at a sufficient rate for everyone to start thinking the Fed is going to give them a break.
What's the big market moving data drops for stocks this week?
Yeah, there's a bit of stuff coming in the US. It's not going to be as important as local stuff, US durable goods, consumer confidence, all those sort of things, construction. And that will be interpreted in terms of, is this pro-inflationary or is it anti-inflationary? But the big stuff is actually locally, Pete. We get the retail trade number for January. We get December quarter economic growth on Wednesday. Then the monthly CPI, which is not as respected as a quarterly index, but still is watched very carefully. And on Thursday, we get home prices as well as building approvals. By the end of this week, we'll have a good idea about how Australia is going in its battle with inflation. And by the way, internationally, Australia is regarded as being in a better position for the stock market than the US right now, particularly because of China's reopening, and there's important Chinese data coming out at the end of the week, which will actually give us an indication of whether China is rebounding coming out of those lockdown restrictions. All
right. Now, is Australia a better place than the US when it comes to market upside, Pete?
Yeah, that's the current thinking, Pete. And I think it will be probably seen for a large part of this year. But once we go back to where we started from, if we get US inflation falling, that's when tech stocks will really take off, I think, in the second half. And then I think Wall Street will lead us. But we are in a good position given the fact that China is reopening. And that's why that data about China's reopening will be critically important come Wednesday or Thursday.
All right. Peter Switzer, good to see you.